You want to talk about the crypto winter that we're in the midst of right now. As we've spoken about quite a bit over the last few weeks, Bitcoin has regularly seen, during its lifespan, drawdowns of more than 70%. Is this drawdown different, though, 50% from its October highs, because of the institutional adoption, because of support from regulators in Washington?
Yeah, Tim, it's a really good question. I think the observation that we've seen this before in Bitcoin is completely accurate. We've been helping investors gain exposure to Bitcoin since 2017 at Bitwise. We've been through bear and bull markets, those 70% drawdowns that you mentioned. So we've seen this before. We're used to this kind of volatility in crypto, and our clients expect this kind of volatility. Now, I do think this time is different than before for a number of reasons that you highlighted. We have massive long-term tailwinds that we believe will propel the market higher over the long term, but investors get anchored on short-term news and negative headlines and this volatility that they're seeing, and they forget the long-term thesis for Bitcoin has never been stronger. We have regulatory tailwinds, we have institutional adoption, we have the rise in demand for hard assets like gold and Bitcoin. All of those things are long-term catalysts that we believe will push Bitcoin significantly higher over the next 5, 10 to 20 years.
Even with those long-term headwinds, though, the short-term price pressures are having an impact. The average all-in cost of mining Bitcoin is around $80,000. We're well below that right now, leaving a lot of miners operating below break even. So we've seen BitDeer Technologies sell all of its Bitcoin holdings, and as of February 20th, it holds no Bitcoin, excluding customer deposits. Are we going to see more instances like that?
Yes, Scarlett, Bitcoin mining is a tough space. You mentioned it's expensive to mine Bitcoin, and it certainly is. And we've seen some miners who have managed their treasuries pretty well over the last bull market. And so they're cash rich and are able to take advantage of this drawdown in price. And we'll see a consolidation in the Bitcoin mining space because of that. And the less well capitalized miners will end up getting eaten by the bigger ones. Other Bitcoin miners have strategically repositioned some of their data centers and assets to support the growth in AI. And so they're a little bit more insulated from the drawdown in Bitcoin price. And so I do think that we will see consolidation across the space. It's a tough market. Margins are tight. Inflation, rising energy costs, those certainly hit miners where it hurts. And the falling price of Bitcoin doesn't help either.
Hey, Ryan, I'm wondering about the place of Bitcoin right now. If we've seen drawdown in Bitcoin close to 50% from those October highs, and other risk assets like equities, for example, the NASDAQ 100 only down about 4.5% from all-time highs a few months ago. Why are we seeing crypto affected so much more, even though its maturity, even though it's more mature right now than it was?
Yeah, even though Bitcoin's more mature now than it was 3 or 4 years ago, Tim, it's still very early in Bitcoin's life cycle. It's only been around since 2009. We've only had Bitcoin ETFs since January 2024, and many of the largest wealth managers, institutional investors, and wirehouses have just started approving access to Bitcoin ETFs this year. Notably, Merrill Lynch started approving access to Bitcoin ETFs earlier this year. The other wirehouses are following suit. So while I do think the market's fundamentally different today than it was before, those driving forces that are long-term catalysts are still taking time to materialize. It's important to remember it's an early and young asset. And I do think that since the October 10 sell-off that we saw, which dramatically impacted liquidity across the crypto space, you guys spoke about it a bit before I came on, with stablecoin AUM falling and ETF outflows in pain, those things have all drawn liquidity out of the crypto ecosystem, which has hurt the price of Bitcoin and other crypto assets more dramatically than other risk assets like equities. But what I believe that means is that when we see liquidity come back into the ecosystem, we're set up very well for a very strong rebound, because while liquidity's been low, positive developments have been high, and that means that there's a mispricing of these assets.
Well, in the meantime, we're seeing Bitcoin just kind of bump along here at about 65,000. There's always a clearing price. There's always a bottom for any financial asset. What is the clearing price for Bitcoin? I know this is a loaded question, but where is the bottom? What is the bottom? How do you think about answering that?
Well, it's hard to predict price movements. As you mentioned, we think there's a floor in between the 50 and 60K range where investors will likely begin to really accelerate their consolidation, their accumulation. A lot of investors that we're speaking to at Bitwise who are long-term oriented, again, these are some of the largest wealth managers in the world, family offices, high net worth individuals. These investors are viewing the current price of Bitcoin in the 60K range as a magnificent opportunity to build positions or expand on existing positions. And so while the bottom is hard to pick, it's difficult to catch a falling knife, we believe that over the next decade, which is how we think about Bitcoin, that the price is going to be significantly higher. Above 1 million 10 years from now isn't far-fetched in our mind because of the catalyst that I mentioned earlier. And so a lot of the investors we're speaking to and working with are excited about the price of Bitcoin right now, which I know sounds odd, but it's the reality that they want to build these positions when the prices are low.
Well, I mean, we're still waiting to see the data on who's buying what, and certainly Strategy keeps buying, even though their assets are underwater. The jury's still out, certainly, on that, Ryan. Before we let you go, if there is this catalyst of moving ahead of increased adoption, that's your number one catalyst, institutional adoption. Why are institutions excited to buy after a drawdown like this and with no clear, other catalysts on the horizon?
I think institutional investors that we speak to at Bitwise are really excited about having access to Bitcoin now. They haven't had access to Bitcoin before the ETFs. As I mentioned, they're just starting to get approved to have access to those. And so their clients and their portfolios just haven't been able to get exposure to Bitcoin. And so they sat on the sidelines while the price of Bitcoin ran from 20, 30, 40,000 up to above 100,000. They thought they'd never have a chance to get access to Bitcoin below 100,000 again. So they're excited about this sell-off because their long-term thesis for Bitcoin, the fact that governments are going to continue to spend recklessly, the fact that fiat debasement will continue to happen over time, and that portfolios globally are needing to reevaluate how they allocate between hard assets and equities and bonds and other alternative assets. And Bitcoin has a role in those portfolios for the long term. That's what the institutional investors that we're speaking to see. And their long-term outlook for Bitcoin hasn't changed just because the price has drawn down. And that's why they view this, and we view this, as a magnificent opportunity to build long-term positions.